Hi, the California Association of Realtors just released a projection about real estate in 2024 and the real estate forecast for 2025, and we are a bit optimistic about what's coming moving forward. And let's get into the numbers to show you how that works out. The main reasons we feel optimistic about the real estate market moving forward is that the acute issues that we've been struggling with, which is the pandemic and the shutdown that came with it. Also, the rate hikes that doubled overnight in the shortest amount of time ever. Those two acute issues are behind us. People during the pandemic got into the trend of buying vacation houses and moving farther and farther away. This shift is fading away, and we see growth in the California housing market. In the cities, people are coming back to the homes that are near offices. Despite the fact that we're optimistic and things are getting better moving forward, we still have two issues that persist, and they present a challenge to home ownership. California, we are on 35 years trend of underbuilding. We don't have enough homes. The builders have not built for a very, very long time. Also, buying a home insurance policy. This has been a very big challenge for home ownership. It has been very difficult for home buyers to find an affordable home insurance policy, and this presented a big challenge for home ownership. We also see high income renters that are waiting to time the market and waiting for mortgage rates to go down. But reality is Fed's rate cuts is not what's important. Many people mistakenly believe the Federal Reserve directly controls mortgage rates. This confusion led to buyers waiting on the sidelines earlier this year, expecting mortgage rates to drop with Fed rate cuts. However, when the Fed announced a 50 basis point cut, 30 years fixed, mortgage rates actually went up. This happens because the Fed only controls short-term rates, not long-term rates like those for mortgages. Mortgage rates are influenced by the bond market, particularly the 10-year Treasury yield. The bond market often reacts ahead of the Fed's moves. In this case, investors were already expecting the 50 basis point cut. And when the cut matched their expectations without exceeding them, rates did shift. Additionally, a strong job report in September caused bond yield to spike, pushing the 10-year Treasury above 4%, which led to mortgage rates climbing back into the 7% range. These swings in rates significantly affected buyers' demand, as even small changes in mortgage rates can make buyers jump into or out of the market, showing how sensitive the market is to interest rate fluctuations. Interest rates are expected to come down, but waiting for them might not be the best strategy. If you find a motivated seller, you could negotiate a rate buy down to as low as 5.9% today. Looking ahead, a 6% mortgage rate, historically typical, is likely to remain the norm, assuming a steady Fed funds rate of 2 to 3% and a balanced bond market. Waiting for rates to drop significantly won't necessarily save you money, especially since experts like California Association of Realtors predict home prices will continue rising, reaching over 900,000 by 2025. Historically, buying sooner rather than later has been the better move in California market, as you can't go back and secure today's prices once they increase. The broader economic outlook suggests slower growth with some rate cuts this year and next, which could soften the impact of rising prices. However, with many homeowners locked into the low rates, transaction growth will likely remain modest, around 10% rather than a dramatic rebound. So, where do we see the silver lining? Demand for home ownership remains strong, and the long term benefits of owning a home are as valuable as ever. With the right guidance from a skilled realtor, you can navigate these challenges and secure your place in a competitive market. Winter tends to be a great time to buy a home. We have got the elections behind us. We have got a couple of Fed rate cuts that will probably still come down the pike this year. And really, the market is a lot less competitive during winter for buyers. There are fewer homes sell above list price. Sellers are willing to negotiate. Days on the market tend to be longer. All these things that favor the buyer in general. So I think that winter might be worth some consideration, even though it is pretty inconvenient to move during the holidays. All signs show that economy is improving slowly, but we have an issue, which is the divided state of the economy. Overall metrics like GDP, jobs, income, and spending show that the economy is recovering with total income at an all-time high. However, these numbers mask a tale of two economies. We are in a bifurcated economy. Higher income households are doing well, but middle and lower income earners are still struggling with the cost of housing, goods, and services. Here in California, we can see that the top end of the market is the leading indicator. You do see some differences by price segment, and again, I think this reflects that the tale of two economies that we spoke about before, and you are seeing this tale of two housing markets play out as a result, because when California transactions volume is increasing, it's mostly because of the very high end of the housing market. Million and up, 2 million, 3 to 5 million, etc., are really doing very well. We are still in a good window for home buyers because we all seen when interest rates go down, home prices shoot back up. In the past, when interest rates were super low, home prices increased by 30 to 40% in most markets. So right now, the combination of being in the winter time and there is more inventory during this time, we haven't had that in the years before. This is a great opportunity for home buyers to buy homes before prices start going back up in spring of 2025. California faces a persistent housing shortage. Despite having a strong economy and a historically growing population, the state builds far fewer homes now than it did when the population was half its current size. Back in the 1970s, with 20 million residents, we constructed significantly more housing than we do today with nearly 40 million people. Even during boom years, the pace of construction hasn't kept up, leading to a long-term deterioration in housing affordability. This affordability challenge persists even with recent rate cuts. And while more cuts may happen, they won't resolve the underlying issue: California's structural imbalance. Too few homes for a growing population in a thriving economy continues to push prices up faster than incomes. So, what does that mean for buyers? This means acting sooner rather than later. Waiting for lower rates can leave you behind, as a rising price does outpace the savings from slightly better mortgages terms. In California, the demand supply gap ensures that prices will continue climbing over time. The benefits of home ownership is very well documented. According to Federal Reserve data, if you take all Americans, line them up from poorest to richest, and look at the family in the middle, their median net worth is around 192,000. However, when you break this group into two categories, homeowners and renters, the difference becomes striking. Home ownership is a powerful driver of wealth building for families and the broader economy. Home ownership provides a tangible asset that appreciates over time, creating financial stability and long-term equity. This makes it one of the most effective ways for individuals and families to build wealth, highlighting why owning a home is such a critical step towards financial security. Here you can see that the median days on the market during the winter is longer, and this is the best time to buy a house, is winter time. For buyers, you want to buy a house when homes are sitting on the market longer, because it is the only chance that you can negotiate the price down. Also, you may be able to negotiate some repairs. So take advantage of the winter time and buy a house during the winter. We have all heard about the one part of the story, which is people are locked into their homes because of the low interest rates they have. But still, homes have to work for them. And increasingly, we are finding that they don't. 1.7 million babies have been born in California since the pandemic started. 1.2 in exchange have died. We have had a lot of folks relocate to other states. People are still getting married, getting divorced. About 500,000 divorces just since the start of the pandemic as well. And so even though a lot of folks are locked into low rate mortgages, they also finding that their homes no longer work for them. And if you look at the multiple listing services, we actually have more inventory now than we have ever had at any point since the start of pandemic. More or less, that's a positive for buyers. You have more options to choose from. And here in this graph, you will see that homes sold for well above asking price when there's more people buying houses and less houses available for sale. So logically, when there is more homes for sale and less buying activity, this is the absolute best time to buy a house because you can negotiate price and you may be able to get repairs done as well. Where does this leave us moving forward in 2025? California Association of Realtors predict home prices will continue rising, reaching over 900,000 by 2025. Historically, buying sooner rather than later has been the better move in California market, as you can't go back and secure today's prices once they increase. So despite the fact that home prices are still on the rise in California, especially going into 2025, home buyers still want to buy a home in California. Look for my next video. It's going to be about how realtors price a home.